Alvin, welcome back to That Mortgage Show. We're not counting episodes, Alvin, so I'm not going to say what episode it is. I don't even know what episode it is because we lost count.
Doesn't matter what episode it is. Nobody counts. Nobody counts episodes. Nobody counts beers. You know what I'm saying?
You can't count.
I'll tell you another thing. This is the first show of 2025. Might be an asterisk. We will not discuss it. First show of 2025.
So, look, That Mortgage Show. What is it? It's a mortgage show. It's a real estate show. Me and Al try to go through some headlines from this week. Good current news. Maybe talk a little bit about the industry. Just really try to give viewer a look behind the curtain.
Look behind the curtain. Peek under the hood. We try to give folks knowledge, right? We try to give them information, pertinent information. We try to educate, but make it fun, right? Keep it light. Keep it airy.
You want to keep it airy, keep it light. We try to keep it quick and concise. Me and Al have a tendency of rambling, but if you're new to the show, stick around, see what we got to offer.
Today we're not going to be. We want you to learn and laugh.
We want you to learn and laugh, and no particular order either. But stick around. Today's episode, we're going to get into. It's not going to be too data heavy. We're going to get into a couple of the hot topics from this week, like we're going to check in on this week's rates. We'll take a look at the jobs report today. Very important jobs report. It's the last jobs report of the 2024 data. It's the last jobs report and kind of like what the current regime will say they handed over to President Trump as far as the economy goes. Mm-hmm. We're going to look at what one Fed official has to say about future rate cuts, and then we're just going to kind of bullshit and get into a little bit of shop talk.
Yeah, shop talk. Al,
you got anything you want to say before we dive into the content?
No, I'm just glad to be here. Thanks.
Okay. All right. So first things first, we're going to take a look at, interest rates from this week. So what did interest rates do this week?
They're up.
They're up. So we're going to look at Associated Press article real quick. Average U.S. long-term mortgage rate inched up to 6.93 this week for the fourth straight increase. As Al might want to point out here, the rate is a little misleading here. It's higher now. But the takeaway from this article is that they're up for the fourth straight week.
Yeah. Rates right now, 30-year fixed rate on a conventional loan. Let's say you're out there looking to get a conventional loan, buy a house conventional. You're looking at about a 7.15% according to Mortgage News Daily.
I'm going to Al, run with a screen share, baby. Run with it, Alvin.
Yeah. So we're running. You're looking at, actually, I was wrong. Did mine not update? Why does yours say it's...
Don't get lost here. Roll with it now.
I refreshed my page and it's even worse. This is our business, right?
It's not good or bad. It's just reporting data.
It's reporting data, right? So here's what happened, right? Earlier today, when I had my Mortgage News Daily up, it was showing 7.15% for that 30-year fixed rate at the top that you see there. Adam pulled this up. As you can see, we're at 7.24%. So the folks that are like, why can't you just tell me your interest rate? Well, that's why, right? Because it adjusts that fast. That's how things change depending on the market. And I can guarantee you that the 10-year treasury bill went up. I don't even have to look at my phone for this one.
We'll look at that next.
Yeah, so guaranteed that's going up today, which pushed rates up. So either way, in any event, you're looking at about a 7.24% on a conventional 30-year fixed rate now.
Yeah, and those publicized rates are they can be a little misleading. It's not accounting for things like your credit score. It's just like a general like average offered. It's almost like
different
an estimate.
Programs.
It's so it's really tough to get a beat on it. But real quick, we'll jump over and look at that 10-year treasury, and then we'll get into the next piece. So 10 years up, 7.61. It's not an exact science, but it's pretty tried and true. As this thing as the 10-year treasury bond yield goes up and down, so do mortgage rates. And it's really freaking crazy. So you can see here, September 16th, it was 3.6. We're up a full 1.1 basis points since then. And what happened in September, Alvin?
I think that's when the Fed announced that they were going to lower rates for the first time in a couple of years, right? They were going to lower their Fed funds rate. And boy, I'll tell you what, I would love to go back and see the show back then. We got to go back. I want to go back and watch that episode. And just,
you know what pisses me off?
I want to cry, and I want to see how happy I was and how bright the future looked in my eyes. Probably had a twinkle.
Yeah,
I wanted to eat some cheese.
Don't lose the twinkle. Al, it's kind of ironic. It's kind of just insane because they, cut the rate and they go up, and they cut the rate and they go up, and they cut the rate and they go up. And then most recently they said they're going to stop cutting rates, and it went up, and rates got worse because of it. Rates get worse when they cut them, and rates get worse when they say they're going to stop cutting them. So
I don't know what's going to make them better, to be completely honest. At this point,
so it's I guess the moral of the story is like you can't depend on it. So just figure out if you're in the market to buy and you want to buy, then let's figure the numbers out and forget about the rate. The rate's irrelevant at this point. Why? But why? Oh, why is the 10-year skyrocketing today? Why are rates getting worse today? So a report came out this morning. That jobs report came out this morning, and
job reports.
The economy and the labor market is looking better than anyone had anticipated, and it's the best jobs report in months. Stocks drop after jobs report shows hot U.S. labor market. Here's why. We don't need to really get into the stock piece, but we'll look at this quote from here. Yields for the baseline 10-year Treasury note shot up about 10 basis points to its highest level since November 2023. It's been a year. It's higher. 2 years. Holy smokes.
2 years, bro.
It's the highest it's been in 2 years. Higher bond yields indicate less valuable bonds as investors demand higher interest payments to hold government debt. They demand it. They freaking demand it. All right.
Well, I got a couple fucking freaking demands that I'd like to make, but nobody's listening.
And last quote from the article, the strong December jobs report could signal to the Fed that there is no immediate urgency to decrease the federal funds rate further or faster. So it kind of, and that's from Eric Merles, co-head of global markets at Citizen Financial Group. So Eric Merles, hey, good take, bro. Anyway, it's kind of, that's also kind of in line with what the Federal Reserve was saying. So they freaking love it. They love that they are like being validated. And look, I'm not rooting against the economy or the labor market, but I don't want there to be more reason to keep rates high. I don't want that there.
No. It's kind of caught between a rock and a hard spot. 256,000 new jobs. Is that right? Is that what it was?
Yeah, I'll run with that.
Now, let us not forget that these numbers could be corrected in the future. Right? So they can come out and say, 256, we got 256. And then they'll come out, a couple months down the line and be like, we need to revise. We got all excited about 256. It was actually 175.
There's also a little game that politicians play, especially like the Democratic Party's leaving office, the Republican Party, and when they like I handed over the greatest economy ever, or I inherited shit. So like, the last report on the labor market before the inauguration is this like, holy crap, we didn't think that the labor market was doing this good. So, there's some political, politicizing going on, some jockeying and whatnot. Yeah. These people play games. They're playing freaking games, dude.
Here's the thing. They're playing with house money. They're not playing with their money, so they don't give a shit.
They don't give a shit. And they win. They win no matter what.
Playing with your money, not their money.
So last screen share, I'm not going to say last screen share because maybe we'll get into some screen shares that aren't planned. But the last planned screen share is, I've got a article here from CNBC. So Fed Governor Bowman says December interest rate cuts should be the last. So there she is. There's good old Bowman. I don't know much about her, but I hear she's hawkish, and I hear it from this one article that I've read about her. So Federal Reserve Governor Michelle Bowman.
Squeeze that into a conversation somehow.
Federal Reserve Governor Michelle Bowman said Thursday she supported the recent interest rate cuts, but said that December reduction should be the final step in the easing process. So she's out on cutting the rates anymore. Which again, I mean, it's not necessarily what you want to hear. It's a couple of mortgage professionals, Alvin.
Yeah, no, it's not what you want to hear. Obviously, it doesn't matter anyway, right? They cut rates and they cut the Fed funds rate, and interest rates still went up. So I don't really know what we need to see in order for mortgage interest rates to come back down. But if I can make this point now, doesn't matter. Doesn't matter, right? It does matter if you're looking to refinance, right? Because you know, in order to refinance, if you wanted to pull out some cash or pay off some bills or something along those lines, then maybe the interest rate doesn't matter as much because having that cash in hand means a little bit more, and you can always refinance down the line. But the folks that are looking to refinance to lower their interest rate just ain't happening right now. On the flip side of that, for the folks that are looking to purchase, the interest rate shouldn't matter at all, right? Because the difference, in you waiting for the interest rate to come down, it just doesn't make sense. Tell me about the projection. What are they projecting for 2025 as far as the rate goes? Why don't we start there?
All right. So all of the folks that analyze the data or make predictions, Fannie Mae, Freddie Mac, Mortgage Bankers Association, Home Builders Association, all of them, they all
Redfin,
they all about land at a rate of 6.5% for 2025. They think that's what the average is going to be, and it's probably a good time to mention that in 2023 the average rate was like 6.9, and the average for 2024 was about 6.7. In 2023 there was more volatility. I think the high got up to like 7.75. The high average was 7.75, and the low end was I'm not really sure what the low end. And then in 2024 the high end was like 7.25, low end 6.6 or whatever. So we're kind of looking at if rates are 6.5 this year. It's about 3 years in a row where they're between 6.5 and 6.9, 20 basis points. Not much of a difference. So if you're waiting on rate, you're just waiting on maybe a half a percentage point.
Right. So then for you, viewer, what does that mean for you? Let me explain. So let's say you're going to buy a $500,000 house. You're going to put $100,000 down, right? You're going to put 20% down. So you have a loan amount of $400,000. If that interest rate is 7%, let's say, your monthly mortgage payment for your principal interest is $2,661, $2,661, right? $400,000 loan, 7% rate, $2,661. Now, let's say you wait, a year, you wanted to wait a year, see if rates came down. Well, they came down to 6.5%. Come down to 6.5%. So that same $400,000 loan, 6.5% is going to be $2,528 for your principal and interest.
$133 difference.
You waited a year for $133, right? Now, during that same year, home values appreciate by about how much, last year?
It was right around 4.5%, and the Goldman Sachs predicts that this next year is going to be right at that 4.5% as well. And then, and that 4.5 is back in line with pre-pandemic levels, like what you can expect out of home appreciation year over year.
Right. So
$20,000 on a $500,000 house.
You're looking at about right around $20,000, right? A little over $20,000 on a $500,000 house. So you waiting a year, you have saved yourself $133 a month in payment, but you lost out on $20 plus $1,000 of equity.
Right. So you pay $1,600 more over that year.
Over the year, you just pay $1,600 more, right? But you have an extra $20,000 plus in equity. I don't think we're doing that the best way possible.
I think. What do you mean?
So presenting it in the best way possible. So
I think it is. I think you did a great job.
Does that make sense? Did we tie it all together? We put a bow on that.
Yeah, I think you.
Let's say it's
close
20 grand.
The loop.
So 20 grand minus your what? What did we say it was? How much?
1,600.
1,600. So you're looking at $8,400 or $18,400. You lost out on $18,400 by waiting for the interest rate to go from 7 to 6.5.
And that's not even taking into account the fact that if you do wait a year, that same house or a similar house is also going to appreciate. So your cost of acquiring the property is going to be higher
You're paying
as well.
more for it, right? So,
Yeah.
So it hurts you. So that's why we say for the folks that are looking to buy a house, this doesn't matter. Interest rates should really not matter. It sucks. Your payments can be a little bit higher than it would be, a couple years ago when rates were really low. You missed the boat. Sorry about it. We're in the here and now. Buy what you can buy, because next year it's going to cost you a hell of a lot more money to buy. Right?
Yeah.
The interest rate's not going to make that much of a difference.
Not going to make that much of a difference, and it doesn't seem to be going anywhere. So if the difference is, if that difference is taking you from qualifying to disqualifying, then you need to adjust your budget, because that's way too close to your max, and it's going to cause issues elsewhere.
Yeah, I mean, all you need is for homeowners insurance or property taxes to be a little out of whack, and the next thing you know, you don't qualify for the loan. It should never be that razor thin.
Yeah, or you qualify and you get into it, and you 3 payments down the road, you're like, shoot, this is holy cow.
I don't have the money for this.
But don't want to beat people up too much, and that's not what we're trying to do. I don't think Al's trying to do that. I'm
1,000% trying to beat people up.
Okay, so Al's beating people up, but I'm gonna be bad cop. No, I'm gonna be good cop. Al's bad cop. So Officer Butt over here, look, he's crazy. I don't know what he's gonna do. He might take your head and slam it on the desk. I'm gonna have to have him cool off. But here's what I gotta tell you. All right, don't beat yourself up if you didn't buy. Don't beat yourself up.
That's what Al's for.
But if you're sitting around making excuses and whatnot, and you have the means, it would be wise. Listen, it'd be wise if you just bought the house. Seriously, we just broke down the numbers. We can do funny accents. We can pretend Al's a bad cop, but it doesn't make sense to just sit around and wait. Ask somebody who bought a house 2 years ago.
Right. So
they've refinanced from 8 to 7. Maybe they caught a dip and got a 6.5. And they're hanging out, chilling in their new house, counting their equity.
Now, for the folks that are waiting because they haven't found the right house, right, and want to find the right house, and there's just not a lot of inventory in the market, different story, right? That's a different story. But if you're waiting around because you're like, well, the rates got to come down, I'm going to hold off until they come down, you're fooling yourself. It's not going to.
Let me take this call real quick.
You're not as important as you thought you were, are you?
Adam?
Yeah, this is Adam. I can try and find that for you.
Yeah, as long as she can give me that, then she can write the lease, because she can't write it if we don't have an updated COI with that name on it.
I'll send an email to somebody with you guys on it and see if you guys can all get to the bottom of it. All right, thanks a lot.
Okay, thank you. Bye-bye.
Bye-bye. Sorry about that. It was a local number, and maybe I thought it was a freaking buyer. All right, what do you want from me?
Sometimes.
So, okay, let's not beat dead horse.
How'd the call end? Is he waiting for rates to come down?
Let's not beat a dead horse here. Let's move on. We were talking earlier on the phone about best practices when you're shopping for a mortgage, and from our perspective, we could talk about how like things that frustrate us, but let's try to add value and let's put on the white hat here and be the good guys and give some people just some like added value on how they can shop for a mortgage, whether or not it means working with us. So Al, can you give like a little insight?
Sure. So I think that everybody, when they're looking to buy, especially make this kind of a purchase, right? This is one of the bigger purchases, one of the biggest transactions you're ever going to do in your life. And everybody wants to feel like they're getting the best deal they possibly can, right? Like they're not getting screwed. Okay. Well, we will be the first to tell you that the difference between this lender and this broker and that broker is very, very minimal. As far as the interest rates, the cost of the loan, things of that nature, very, very slim. If there's a difference in interest rate, you're talking at most maybe a quarter of a point, and that's probably a stretch.
Yeah.
So everybody wants to feel like they're getting the best deal. And so sometimes you have folks that you work with where you quote them the best you got, right? It does not behoove us to give somebody a higher interest rate or to charge them more fees. Our interest are making sure that the person is happy with their loan, they qualify for their loan, and we give them the best deal we possibly can. And, so you have folks that will, they got your quote and then they'll go out and they'll talk to this company and then they talk to that company and they talk to this and they're like, they come back to you and like, well, this company down the street said that they can do the same loan and the interest rate's a point lower, right? And they're like, can you match that? And it's like, they'll send us the loan estimate. We look at it, it's like, well, yeah, they're giving you an interest rate that's 1% lower, but they're charging you 2 points for it, right?
They're charging you $8,000 for it.
Yeah, $8,000 for it. Yeah. Right. And you're like, oh my God, I didn't know that. Okay. Well, let me go back and talk to them. So then they go back and talk to them. And they come back to you and are like, oh, yeah, well, they're going to try to get a management approval to get some of that waived. But I got this thing in the mail, so I reached out to this person, and they told me they could. What are you doing to yourself, right? You're not going to find, there's not some magical golden mortgage company out there that's charging 3% less than everybody else and no fees, and you're going to get the best deal possible if you just keep searching and find. The moral of the story is find the loan officer, find the person that you want to work with. And that should be the biggest catalyst, the person that's going to do right by you, the person that you ought to, that you think is going to give you a good deal. Don't get me wrong, but has your best interest at heart, isn't going to try to overpromise and underdeliver, and it's going to come through, get the loan done for you. Right?
Yeah, that's big. Getting the loan done for you is huge, and people don't see the costs associated with pushing a closing date, or the mental costs associated with working with somebody who's not organized or doesn't know the process. But what I try to tell people, so to your point of like ultra shoppers that are like getting like 3, 4, 5 loan estimates and talking, how can you even keep up with that? It's a full-time job. Working with one loan officer and looking at one loan estimate with one set of fees is overwhelming, and you should work with somebody who can speak to you in a manner that, it can translate the information in a way that you understand. Having 5 sets of that and having 5 of those conversations is it's going to do you more harm than good. So what I typically tell people is like, yeah, for sure shop, but have extended conversations with people. Don't just email them, what's your rate? Send me your fees. Like, it's really hard to determine who you want to work with for 30, 45. If it's just a pre-approval, maybe 6 months, So I say to my clients or my prospective clients, like, have a couple conversations, 10-minute conversation, and feel this person out, and you'll be able to identify who you want to work with. And if all else is equal as far as rates and fees, work with the person that you connect with, that you vibe with. I hate to be like this, but I'm the social butterfly of like basically every situation. If you didn't know that,
the butterfly.
Yeah, no, I'm the butterfly.
I thought because I am, it's always I kind of bounce all around. It's never a straight line. I'm the butterfly. You can be the butterfly. I'll figure something else out. I'll be something else.
Out butterflied me there. No, I'm bubbly is what I was maybe looking for. Very bubbly. Mm-hmm. So all right, here's why Al's the butterfly, because he doesn't fly in a straight line, and he just butterfly me right off my point. I don't even know what I was going to say.
You right off of your point. I got you. No, your point was work with somebody that you trust, that you think you're going to work well together with, and that you think is actually going to get the job done for you. Right?
If you're having a 10-minute conversation with a loan officer and they can't carry the conversation, if you're talking about like the loan and the costs associated with it and the process, I got one. Ask your loan officer what their process looks like from start to finish. And if they can't give you a concise and clear picture of what the process looks like, don't work with them.
Yeah.
Process is everything.
Yeah.
All right. So, I think the 2 takeaways for me would be: limit your quotes, have an extended conversation with whoever you're shopping with, identify who you want to work with, and entrust them.
Yeah. Yeah. Have faith that the person you choose to work with is gonna give you the best deal possible. They're going to do right by you. They're going to get it done, and they're going to do it in a way that's, putting you in the best situation for yourself and your family and your future. So,
yeah. All right. So, let's see here. What did I want to? 2 things that I want to like social media type stuff that I want to take a look at. So one was something that our buddy sent us earlier in the week that I found really cool, and I want to share it here. It's mortgage adjacent, and we love going mortgage adjacent.
We are mortgage adjacent.
All right, so check this out. Can you see it, Al?
Yeah.
All right, so this picture here, you see the picture? This is a penny auction at a foreclosed Michigan farm in 1936. Other farmers would conspire to only offer low bids, resulting in a likely loss for the bank. The winner would return the property to the destitute farmer. Hangman nooses served as a warning to bidders seeking personal gain. Mm-hmm. So, if a home or a farm is foreclosed on, the bank takes it back and then the bank sells it.
Yeah.
So how cool is this community coming together to like stick it to the bank and support their fellow farmer, community member, whatever.
Yeah. Looking out for their guy, everybody working together, not letting Potter get another couple dollars in his pocket, right?
Mm-hmm.
Who doesn't want to be George Bailey? Everybody wants to be George Bailey. Unfortunately, we live in a time where there are no George Baileys.
And unfortunately, we live in a time where that is like super dated and nobody probably knows what that is. And it's a shame because George Bailey, It's a Wonderful Life is fantastic.
But the moral of the story is, when community looked out for each other instead of everybody constantly trying to, take advantage of a situation.
Yeah. I wish that we had more of that. We touched on it earlier, like just the go, more, competition.
Social media, right?
Social media, certainly in our
it's
business.
So easy to compare yourself to this person or that person or this family or that couple, or they're going on this vacation, they're going on that vacation, they have this car, they have that house. Who the hell cares, right? Like, comparison is the thief of joy.
Yeah, but we live in a time and place where it's like I got to get mine, and that photo that we just shared, like they have a hangman's noose to remind people that whoever's there for personal gain, like it is only about personal gain in most of the time in today's world.
Yeah.
That's one thing that actually, not to be like rah, but that's something that I do admire about Cornerstone and the culture that they try to develop, and like what Sean is about is like, he really does seem to be about supporting each other and it being a community of loan officers that help one another, like whether it be the loan officer teams group or like just whatever. There's like tons of support and everyone seems genuine, which is really cool in this like cutthroat business.
I've personally reached out to other loan officers within the company looking for contacts for this or help on a certain type of loan, and everybody's willing to help. So it's a great kind of community feel.
Yeah,
I love that.
Cool. I think that's a good note to wrap up on. We just hit the 30-minute mark. So Al, you want to bring it home, close us out?
Yeah, it's a great show. It's only the beginning, right? First show of 2025. This is our second, what are we, like 2.5 years into doing this? So the shows are getting better, right? The shows are getting better. We're happy with where we've come from, but we're not at the destination yet. We'll keep climbing.
We will keep climbing.
Hopefully you appreciate the content. Hopefully you got a nice takeaway, and tune in each week. We're gonna hopefully educate and laugh. We'll have some laughs.
There'll be some laughs along the way. I can guarantee that. Let's close it out with this. I'm gonna do one more screen share because I am a screen share slut. All right, so here we go. Here's that Mortgage Show's YouTube channel. Please go subscribe, like, hit the notification bell. You can get alerted anytime we post new content. We've got long form video. You can see, like, we've put in the work. We've been putting it in for some time.
You can see the evolution there too.
And then we've got tons of shorts, little tidbits. So check us out. Stick around. If you have a mortgage need, friend, family has a mortgage need, shoot them our name, number. We'd love to help. Otherwise, we'll catch you next week. Alvin.
Great show, Ab. Till next time.
All right. See ya.